Mexico is quietly transforming into an economic powerhouse, and most people aren't even paying attention. While the world's focus remains on China and the US, Mexico has been making strategic moves that are turning it into a major global player. From booming manufacturing hubs to skyrocketing foreign investments, the country is capitalizing on a unique set of advantages that could redefine its economic future. One of the biggest drivers behind Mexico's rise is nearshoring, the trend of companies relocating production closer to the US to cut costs and avoid supply chain disruptions. Add in strong trade agreements like USMCA, a young and skilled workforce, and increasing foreign investment, and you've got the perfect recipe for an economic surge. But here's the real question: is Mexico's growth sustainable, or is it just another short lived boom? In this video, we will break down the key factors behind Mexico's rise, explore the challenges it faces, and see if this economic momentum can last. Let's dive in. For decades, Mexico's economy was heavily reliant on oil. Pemex, the state-owned oil giant, dominated government revenues, and economic stability often hinged on volatile global oil prices. But over the past few decades, Mexico has undergone a significant shift, moving away from this dependence and embracing a more diversified economy. This transformation didn't happen overnight. It was fueled by strategic policies, trade agreements, and a manufacturing boom that reshaped the country's economic landscape. A major turning point came in 1994 with NAFTA, North American Free Trade Agreement, which connected Mexico's economy more closely to the US and Canada. The agreement opened the floodgates for investment, allowing Mexico to integrate into global supply chains. It boosted exports, attracted multinational companies, and helped the country establish itself as a key player in manufacturing. However, NAFTA had its flaws, leading to job displacement in some sectors and economic imbalances. In 2020, NAFTA was replaced by the USMCA, United States-Mexico-Canada Agreement, which strengthened labor production, increased regional content requirements in manufacturing, and provided a more balanced framework for trade. This newer agreement has reinforced Mexico's position as a reliable trade partner, further solidifying its economic ties with the US. One of the biggest success stories of Mexico's transformation has been the rise of its manufacturing sector, particularly in the automotive industry. Mexico is now the seventh largest car producers in the world, with global giants like General Motors, Ford, Toyota, and Volkswagen setting up massive production plants. This sector alone employs over 1 million people and accounts for nearly 20% of Mexico's total exports. The country's strategic location, right next to the largest consumer market in the world, makes it an ideal hub for car manufacturing, as vehicles can be produced at lower costs and quickly shipped to the US. Beyond automobiles, Mexico has become a manufacturing powerhouse in industries like electronics, aerospace, and medical devices. Factories in cities like Monterrey, Guadalajara, and Tijuana produce everything from flat-screen TVs to aircraft components, making Mexico a critical link in global supply chains. The country's competitive labor costs, combined with a young and increasingly skilled workforce, have only accelerated this growth. But this transformation isn't just about factories and exports. Mexico has also seen a rise in service industries, technology, and entrepreneurship, further diversifying its economy. Cities like Mexico City and Guadalajara are emerging as tech hubs, attracting startups and global tech firms looking to tap into Mexico's growing digital economy. The shift from an oil-dependent economy to a diverse, export-driven model has positioned Mexico for long-term growth. However, this transformation also brings challenges. From economic inequality to concerns about over-reliance on trade agreements, the question remains: can Mexico sustain this momentum, or are there hidden risks that could slow it down? As global supply chains face increasing disruptions, Mexico has emerged as a prime destination for nearshoring, a strategy where companies relocate production closer to their main consumer markets. Rising labor costs in China, trade tensions between the US and China, and the supply chain chaos caused by the pandemic have pushed many companies to rethink their manufacturing strategies. Mexico, with its geographic advantage, skilled workforce, and trade agreements, has become an attractive alternative for businesses looking to cut costs and reduce risks. One of Mexico's biggest advantages is its proximity to the US, the world's largest economy. Goods produced in Mexican factories can be shipped across the border in a matter of hours or days, compared to weeks or even months when shipping from Asia. This significantly reduces transportation costs, delivery times, and inventory risks, making Mexico an ideal hub for companies that need fast and reliable supply chains. Additionally, with the USMCA trade agreement in place, many products assembled in Mexico can enter the US tariff-free, further increasing its appeal as a nearshoring destination. Another key factor driving nearshoring to Mexico is its competitive labor costs. While wages in Mexico are higher than in some Asian countries, they remain significantly lower than in the US, allowing companies to produce goods at a lower cost while still maintaining high quality standards. Unlike in China, where wages have been steadily rising, Mexico offers a stable and affordable workforce with experience in advanced manufacturing. The government has also invested in vocational training programs, ensuring a steady supply of skilled workers, particularly in sectors like automotive and electronics. Several industries are seeing huge benefits from nearshoring, with automotive and electronics leading the way. As one of the largest vehicle manufacturers in the world, Mexico continues to attract major car makers and auto parts suppliers looking to set up or expand their production facilities. The shift to electric vehicles is also playing a role, with companies like Tesla and BMW investing heavily in Mexican EV production to meet growing demand in North America. Beyond cars, the electronics industry is booming as well. Companies that previously relied on China for electronics manufacturing are now setting up operations in Mexico to be closer to the US. Semiconductor firms, appliance manufacturers, and consumer electronics brands are all expanding their presence, making Mexico a key player in the global tech supply chain. Other sectors such as aerospace, medical devices, and textiles are also benefiting from the nearshoring trend. Cities like Monterrey, Tijuana, and Querétaro have become hubs for advanced manufacturing, attracting investment from multinational corporations eager to take advantage of Mexico's skilled workforce and logistical advantages. Nearshoring is not just a short-term trend. It's reshaping Mexico's economy for the long run. With the world moving toward more regionalized supply chains, Mexico is positioning itself as a critical manufacturing and trade hub. But while the opportunities are vast, challenges like infrastructure limitations and political stability will determine whether Mexico can fully capitalize on this moment. As Mexico cements its position as a global manufacturing hub, foreign investors are pouring billions into the country, eager to take advantage of its strategic location, trade agreements, and skilled workforce. With supply chains shifting away from Asia, multinational corporations and financial institutions see Mexico as one of the most promising emerging markets. The influx of capital is fueling industrial expansion, creating jobs, and transforming cities into key production centers. One of the biggest drivers of foreign investment is Mexico's trade-friendly policies and open economy. The United States-Mexico-Canada Agreement (USMCA) provides predictability and stability for investors, ensuring favorable trade conditions. In addition, Mexico has over a dozen free trade agreements with more than 50 countries, making it an attractive gateway for companies looking to reach both North and South American markets. Companies from the US, Canada, Europe, and even China are now setting up operations in Mexico to avoid tariffs and benefit from its skilled labor force. The result: rapid industrial growth in key regions. Cities like Monterrey, Tijuana, Guadalajara, and Querétaro have become manufacturing and technology hubs, attracting billions in investment. Monterrey, often referred to as Mexico's industrial capital, has seen a surge in factories, logistics centers, and corporate offices. Companies like Tesla, General Motors, and Kia are investing heavily in this region, particularly in electric vehicle production. Monterrey's business-friendly environment, well-developed infrastructure, and proximity to the US make it an ideal location for manufacturing and distribution. Similarly, Tijuana has emerged as a major hub for electronics and medical device manufacturing. Due to its close proximity to California, many US companies prefer to set up facilities here to take advantage of Mexico's lower labor costs while maintaining quick access to American markets. The city's booming maquiladora industry, factories that import raw materials duty-free, assemble products and then export them, has made it a critical player in global supply chains. To support this rapid industrial growth, Mexico has been making significant infrastructure investments. Expanding highways, modernizing ports, and improving railway networks have been key priorities to ensure smooth transportation of goods. The Mexican government, in collaboration with private investors, is developing new industrial parks, logistics centers, and high-tech zones to meet the growing demand from multinational corporations. Energy infrastructure is another major focus. As more manufacturing moves to Mexico, demand for reliable electricity and sustainable energy sources is increasing. The country is investing in renewable energy projects, including solar and wind farms, to support its expanding industrial base while reducing dependence on fossil fuels. This shift is also making Mexico more attractive to environmentally conscious companies looking to meet sustainability targets. Foreign investment isn't just about factories and infrastructure, it's reshaping the Mexican economy, creating high value jobs, boosting exports, and enhancing Mexico's role in the global market. However, challenges remain, such as security concerns, bureaucracy, and regulatory hurdles. If Mexico can address these issues, it has the potential to become one of the world's most important industrial powerhouses in the coming decades. While Mexico's economic growth has been impressive, serious challenges threaten its long-term stability. Despite attracting foreign investment and becoming a nearshoring powerhouse, crime, corruption, political instability, and economic inequality continue to pose significant risks. Mexico's reliance on US trade also creates vulnerabilities that could derail its progress if not managed carefully. One of the most pressing concerns is crime and security. Mexico has struggled for decades with drug cartels, organized crime, and high levels of violence, particularly in industrial and border regions. While cities like Monterrey and Tijuana are thriving economically, they also rank among the most dangerous due to cartel-related violence and extortion. This increases costs for businesses as they must invest in private security, and in some cases, it deters foreign investors who worry about the risks of operating in certain areas. Corruption further complicates economic growth. Bribery, fraud, and lack of transparency in government institutions have long been a challenge for businesses operating in Mexico. Investors often face bureaucratic red tape, inconsistent regulations, and weak law enforcement, making it difficult to navigate the business environment. Although Mexico has implemented anti-corruption reforms in recent years, progress has been slow, and political instability makes these efforts inconsistent. Changes in leadership can shift policies drastically, creating uncertainty for companies and foreign investors who prefer stability when making long-term commitments. Beyond security and governance issues, income inequality remains a major concern. While some regions like Monterrey and Mexico City are booming, rural areas and southern states continue to struggle with poverty, lack of infrastructure, and fewer economic opportunities. The gap between rich and poor is one of the widest in Latin America, with millions of Mexicans working in informal jobs without benefits or job security. This regional economic disparity creates a two-speed economy where some areas thrive while others remain stagnant. If this issue is not addressed, social unrest and migration to wealthier regions could become even more pronounced. Another major challenge is Mexico's reliance on the US economy. Nearly 80% of Mexico's exports go to the United States, making it highly dependent on its northern neighbor. While the USMCA trade agreement provides some level of protection, Mexico remains vulnerable to US economic slowdowns, policy changes, and trade disputes. If the US imposes new tariffs, strengthens domestic manufacturing, or enters a recession, Mexico's economy would feel the impact immediately. This over-reliance on a single market limits diversification and increases economic risk. Looking ahead, Mexico's ability to address these challenges will determine whether its current growth is sustainable. Strengthening institutions, improving security, investing in education and regional development, and diversifying trade relationships beyond the US will be critical. If Mexico can tackle these issues, It has the potential to become a true economic powerhouse, but if these challenges persist, they could undermine its progress and leave it vulnerable to future crises. Mexico's rapid economic growth has positioned it as a rising global player, but can it sustain this momentum in the long run? The country has already proven its resilience by transitioning from an oil-dependent economy to a manufacturing and nearshoring hub. However, to secure its place as a true economic powerhouse, Mexico must diversify its industries, invest in innovation, and strengthen its institutions. One of the most promising areas for Mexico's future is technology and digital transformation. As manufacturing and nearshoring thrive, companies are increasingly looking to Mexico not just for factories, but also for skilled labor in tech and software development. Cities like Guadalajara, often called Mexico's Silicon Valley, are attracting major tech companies with firms outsourcing everything from software engineering to AI development. If Mexico can continue investing in education and digital infrastructure, it could position itself as a top destination for high-tech industries, reducing reliance on traditional manufacturing. Another key sector shaping Mexico's future is renewable energy. The country is rich in solar and wind resources, and with global energy trends shifting toward sustainability, Mexico has a major opportunity to expand its clean energy sector. However, recent government policies have created uncertainty for private energy investors, with a preference for state-run energy companies over foreign participation. If Mexico can strike a balance between national interests and foreign investment, its renewable energy sector could become a key driver of economic growth and energy independence. Innovation and entrepreneurship will also play a crucial role. Mexico's startup ecosystem is growing, with fintech, e-commerce, and logistics companies attracting billions in investment. With a young, dynamic workforce and increasing internet penetration, Mexico has the potential to become a regional tech hub. However, challenges like access to venture capital, bureaucracy, and regulatory hurdles must be addressed to ensure that small businesses and startups can thrive. Despite these opportunities, Mexico's future depends on its ability to solve long-standing structural issues. Improving security, reducing corruption, and ensuring fair wealth distribution will determine whether economic growth benefits the entire population or remains concentrated in selected regions. Strengthening trade partnerships beyond the US will also be essential in reducing economic vulnerability. Mexico has begun expanding ties with Europe and Asia, but greater diversification is needed to safeguard against external shocks. So, will Mexico become a true economic superpower? The foundation is there, and if the right policies are implemented, Mexico has the potential to be a dominant force in the global economy. However, it must navigate its risks carefully, because rapid growth without stability can lead to setbacks just as quickly as success. But while Mexico is rising, another economic giant is facing hidden struggles. South Korea may seem like a model of success, but beneath the surface, is fighting a different battle. For that, you can watch this next video showing up on your screen. Thanks for watching, mate. Bye.